Good morning, everyone. Again, we start one more panel, the panel on coordinating secure transactions reforms with the private sector and non-governmental organizations. Our panel will examine the private sector and NGO participation in the preparation of secure transactions reform and consider possible improvements. We have very experienced star panel, starting with Monica Blanco, representing the Factor Chain International. Monica Martin Blanco is a lawyer and a supply chain finance specialist from Spain. She holds an MD in Law and International Commerce by the Universidad Autónoma de Madrid and the International Chamber of Commerce, and is consultant for FCI, IFC, and ADB, helping central banks and private institutions in developing supply chain finance products in multiple regions, including Southeast and Central Asia, Latin America, North and Sub-Saharan Africa. Monica will give us the contribution of Factor Chain International. Monica, you have the floor, please.
Thank you so much for the introduction, Spyridon, and greetings to all of you in the public who are in Rome, lucky you. And for those that are not so lucky and are online, also hello to everyone. Thanks to technology and the support of Audrey from your side, I can be here with you today. So first, let me talk about how important all these model laws, and in particular, factory model law, are for factors and for the whole society. We all know that companies who supply goods, which are normally SMEs, have in factoring a great financial tool that allows them to better access finance through the sale and assignment of receivables. And they have a better access to finance than under any other traditional loan or overdraft. And these factoring deals are usually with entail much affordable rates. So the reason for this is because factors finance trade receivables arising from the sales of goods and the provision of services. So for factors, which are the companies granting these financing tools, their major concern is the ability of the debtor of the transaction to pay on time, whilst the risk of the seller is of lesser importance. Therefore, any legal development that ensures that factors have more security over such payment and over those receivables is of paramount importance. We have worldwide, we have some countries that have a specific legal frameworks for factoring, and others which in the civil code, they already have some provision and language provision that supports it. But in many emerging countries, there is normally no language to support the proper assignment of account receivables and to protect the rights of factors against third parties. So this creates many uncertainties in relation to the interpretation of contracts, which actually increases the perception of risks by practitioners and regulators, translating this into a lack of confidence on investors, which at the end results in a disregard of these valuable assets. On the other hand, the potential of these emerging countries, who actually represent the future of the factoring and of the reverse factoring industry, factoring is a tool that is just getting started. So therefore, the question of supporting any model law, and in particular factoring model law, is of paramount importance to FCI and to our members and all the stakeholders. So these are the reasons why FCI has actively supported the development of assignment laws and protection of rights through model law on factoring, which has been guided by UNCITRAL at first and promoted and supported by FCI, which has been enforced in some countries, like in the US in 2001, for example. However, FCI jumped in when the World Bank suggested to launch a formal model factoring law under the auspices of the UNIDROIT on May 2019 in Rome, and agreed to move forward with the formation and the adoption of this model law on factoring. So even though there have been serious objections to focus on a single model law that only covers receivables finance, instead of a bigger and wider scope model law on secure transactions that also covers other types of collateral, we find that it's very difficult to convince legislators to fully implement the secure transactions law in one single effort. As you were already saying this, the implementation affects many other legislations, which after a careful look, they always need reforms. So what do factors actually need? In very short, they need a safe environment to create trust in the handling of factoring and reverse factoring transactions. And this can only be achieved if the creation of the security right, meaning that the assignment of the receivable is effective and not limited in any way. So there should be no contractual bans of assignment, which impede the transfer of these receivables to the factors. And also that the transfer of future receivables is allowed without any further act of transfer when the receivables are born. Secondly, what they need is the perfection of the security right, which refers to the effectiveness against third parties. And in this case, we need that factoring and all receivables-based financing is included by legislators within the scope of the secure transactions law, which is not always the case. And third, it's effectiveness and priority. Factors need substantive rules to avoid conflict of law for priorities among other competing claimants. But what concerns us all as factoring and reverse factoring practitioners is how to redress these receivables in courts and how to recover our rights as owner of these debts. This is because under a non-recourse factoring and always under reverse factoring transaction, the factor provides protection against bad debts, default protection, so that payment by the factor is made even if the factor of the receivable is unable to pay or becomes insolvent. And this is the real challenge when the secure transactions law interfaces with other laws, it creates a super modern structure that sometimes is hardly sustained by judicial dunning procedures in these developing countries, where there is often a lack of knowledge and awareness of these more complex structures like factoring and reverse. The number and type of these interfaces between secure transactions law and other laws, of course, depend on the scope of the model law, but it's clear that the factoring, the scope of this law is clear that the factoring model law will still have conflicts with existing laws, but we think that is narrower, it will be easier to solve. So FCI therefore has certain expectations for this model law. We would like to see that the scope is expanded to all kinds of receivables finance, not only factoring. As receivables finance industry nowadays offers various kind of credit facilities. Among them is factoring, but it's also supply chain finance, as we said, reverse factoring, and many others, all based on the outright assignments of receivables. Therefore, all of them need to be contemplated in order to promote them and also allow more companies at the end to use these receivables as an asset to better access finance. Of course, we also have other additional requirements for making factoring successful outside any model law of factoring or secure transactions, like having prudential regulations and supervision of the business, so that ensures the quality of the market players. Also that factors have access to public or private databases in order to evaluate the creditworthiness of suppliers and debtors, and that factors have access to an impartial and effective judicial system, of course, that allows speedy collection of receivables. Obviously, FCI's efforts to promote any legal body of law that keeps all this together has always been, FCI has always been working in this direction since the preparation of the UN Convention of the Assignment of Receivables in International Trade, which was finalized in 2001. At the time, FCI was represented by the late Freddie Challenger and one of our legal committee members, Dr. Ulrich Brink, who couldn't be here today, who back then represented Europa Factoring, which is the predecessor of the UF Federation. So these materials have also been included in all our courses and ad hoc education efforts with judges and courts and central banks under the FCI Academy, which educates in factoring and supply chain finance. FCI has also participated in the UN Assignment Convention, centering its efforts around factoring and receivables finance. As for FCI, as I said, it's very important to ensure that the wider model of the secure transactions law, which interfaces with security rights, did not negatively impact factoring transactions. Based on the assignment of conventions, International Factors Group, before merging with FCI, created already a model law on factoring in 2014. This law was redrafted in 2016 by Edward Wild, who is now member of and chairman of the FCI Legal Committee. This law was promoted by a Frexim Bank for 17 African states, adopted in Republic of Congo, and right now being in discussion in Ghana, and in discussion of its adoption by the states of the African Union. This law was also adopted in Nigeria, but it has been withheld by the recent elections in order to be finally enacted. We have also made some efforts in Kenya, Ivory Coast, and have been also part together with a Frexim of these efforts. FCI also supported the UNIDROIT model law on factoring, which is currently being devised and which is based in the same concept of the UN Assignment Convention and the Secure Transactions Law to allow free assignability of trade and receivables while keeping up the principle of debtor protection. With the support of FCI, this factoring model law has been also promoted in the OHADA countries and on the EBRD countries since 2020. FCI has been engaged in projects promoting factoring, again, with my colleague Edward Weil. This promotion of model laws in factoring to central banks and other stakeholders. We have been doing it in Ukraine, in Jordan, in Georgia, Uzbekistan, and Kyrgyzstan. Edward Weil has been working, it's a very hard-working man, has been working on a new factoring law and bank regulations for an ex-Soviet republic with the help of Dr. Ulrich Brink, which will mean that a Russian-based civil code will be rewritten with the official funding from Japan. But FCI has also supported the development of a special purpose grant authorized by the African Development Bank to deploy capacity building in the emerging factoring in Africa that will ultimately benefit SMEs across the continent. FCI has provided already 100 e-learning courses to students under this grant. Also, with the help of ADB in Bangladesh, FCI has made efforts dating back in 2005 and has been made possible that the Bangladesh Central Bank has approved its first policy on international factoring. And this past January, Central Bank has adopted the approval to allow credit insurers to operate in Bangladesh to support the growth of factoring. Also in Jordan, again with the efforts of EBRD, we have helped to create a new law, a new banking regulation on factoring, and FCI has sent out the regulatory draft proposal to the central bank, and we are organizing a sensitization training for their staff in order to organize a seminar to the financial sector there. In India, India passed their factoring law in 2012, including an update in 2021. They also passed a new regulation to allow return of foreign credit insurers to the market. And Emirates, we have held a training session last year together with the government. So, and last but not least, just for you to know, FCI is in the process of working with members to launch a legal study in 90 countries, in coordination with the EU Federation, who has already created a study of factoring laws around the European Union. And more or less, these are our efforts working with multilateral banks and everyone that is wanting to promote factoring. So this is all about from my side, Spyros and everyone. Thank you for inviting FCI here today, and hope you have a wonderful day.
Thank you very much, Monica. I hope you can stick around for a while in case there is a question on your presentation. In the interest of time, and thank you also for mentioning our late friend Freddie Salinger, and of course Ulrich Brink, who continues contributing to international legislative efforts in the field of factoring. Now we move to our second panelist, Bob Trojan, who represents the World Open Account. Bob is a senior advisor of World Open Account. He's also the CEO of his advisory firm, Financial Services Insights. He was an active member of the old Ancestral Working Group 6 and led the coalition that succeeded in getting the United States to ratify the UN Receivables Convention. That is a remarkable accomplishment of Bob, and we hope that he will continue in this field. So, Bob, the floor is yours.
Thank you, Spyros. And it's I'm delighted to see everyone here in person. I was remembering my last international travel was to the third coordination conference in Cartagena in February 2020. And we had just heard about this COVID thing out in China. And, people were getting a little antsy. And so who knew that less than a month later that the world would shut down? And so that had a lot of impact. And so what this panel is I like to refer to it as the industry panel. And so what's we talk about all of the secured transaction reform from a legal perspective, but then we have the industry that actually is doing these transactions day to day. And so I'm here representing the world of open account and WOA, as we call it. And so we're the new kids on the block. So yeah, we'll hear from Richard from SFNet, or the former CFA. We just heard from Monica from FCI. And so those organizations have been around for a long, long time, and have a great history and great contribution over decades. The world of open accounts started in late 2018. So we're just about to turn 4, 2 of which was in COVID. And so the idea behind the World of Open Account, which was started by Eric Timmermans and John Bressist back in 2018, was, hey, what if we were to start from scratch an industry organization, an industry trade association? So one that does not have a history, and a history is great, but it also has structure, and it has politics, and it has silos, and it has power. And what if we started from scratch? What would we do differently? And so the structures of the World of Open Account were to be a collaborative. There is no structure, and we would be digitally native, kind of like everyone's kids are digitally native. And focus on innovation. What would that look like? And so, I'm happy to report that the last 3 or 4 years have been a journey. We one of World of Open Accounts trademarks was we were going to be digitally native, and we were going to be only online. And so, all of those other organizations that had things in person, we wouldn't want to do any of that. And so COVID hit, boom, and everyone went virtual. So we had a nice crowded space with our friends in Zoom. So we just had our third actually in-person conference in Germany about 10 days ago. And I'm here to report some of the things we discussed at that in-person event. One of the things we talked about is what happened in the last 3 years. It's in the receivables finance, trade finance, supply chain finance, factoring industry. And one of the presentations we had was, for example, what happened in the UK. So, all right, so we're in Cartagena. Boom, COVID hits. It's March 2020. What happens? So, in the UK, for example, the thought was, oh my goodness, we're going to really need to get a lot of capital because we're going to have a lot of demand. We're going to have really difficult credit decisions because everyone's going to need to finance everything because there's not going to be business coming in. That was completely wrong. That we had no idea that governments, particularly the UK government, but also the US, and everyone would open the floodgates of capital, and that there would be nearly no demand for our services. So no one needed factoring or receivables finance because they had free money, literally, from the government to get them through the pandemic. So it goes to show that even the best and brightest of the industry can get it completely wrong. So 2020 was very tough. 2021 much better, and now we're back in person. And with forced innovation. So I mentioned that the World of Open Account was based on innovation, and this was greatness. People have said greatness is you're either born to greatness or it's thrust upon you. And so innovation was thrust upon the industry, and we're seeing the fruits of that now. In our last panel discussion of what should we do in terms of innovation, I think countries, banks, industries, were forced into innovation because of the pandemic. And I will not say that there's any silver lining to the pandemic, because there is none, but it did force us to get to our destination a lot faster. So the purpose of this panel is to talk about coordinating secure transaction with private sector, with NGOs, and how can we improve that in the design and the implementation. As Ignacio said yesterday, really those are two separate places. Those are two separate discussions. So I can report to you that in the design of secure transaction, I think we've done a pretty darn good job of engaging industry in that process. I think the most recent model law on factoring is just a great example of the process of engaging industry, where we have FCI and WOA and SFNet, at the table along the way. And I think the product of the model law and factoring shows that. And next week, I believe it is, you'll see everyone got a pamphlet that we're doing a call on questions about that. And then there's a deadline for industry input. And I think we'll see that that's going to be very, very robust. And I think that's how we do it right. Same with digital assets. We've really engaged the industry as much as possible, much more heterogeneous industry. I had a to-do as part of that project to reach out to my contact in the industry. And, I was able to get to the CEO of Celsius Network, and they introduced us to their general counsel. And the question was, so how is Celsius Network using secured transactions, and collateral and such? And I never heard from their general counsel. I called him like 3 times, as I was asked to do, and I never heard from him. That's because they didn't do any secured transactions, and then they went bankrupt. So and took everyone's money. So it's very important to talk to everyone in the industry. Now, the other part of that is, so how do we use industry in the implementation of secure transaction reform? And that's where I think we have an opportunity. In that, I think when the instruments are done, that's the beginning of the journey, not the end. And so, given the track record we've had on implementation of the Receivables Convention, the model law, even other things outside, the Moderator, the model law on electronic transferable records, I think we're seeing the necessity of having private industry really be at the table to make those things happen and get ratified. And so, as part of the prep for this panel, we had like the best prep call ever. We were hooping and hollering like old men and old ladies. And so I look forward to the rest of this panel to hoop and holler with the rest of my panelists. So back over to you, Spyridon.
Thank you very much, Bob. And we appreciate very much both your presentation and the leadership you have provided in this field. We turn now to our friend and colleague, Richard Kohn, representing Secured Finance Network, in the past Commercial Finance Association. Richard is the co-founder of the Chicago-based law firm Goldberg Kohn, where he specializes in structuring and documenting cross-border loans. He also teaches cross-border lending at the Chicago University Law School. He was co-general counsel of the Secured Finance Network for 20 years, and now chairs that organization's International Finance and Development Committee. Richard has been active in secure transactions reforms for over more than 20 years, which has included serving on the working groups and expert groups for various ancestral projects, and most recently working on a number of projects for UNIDROIT. I can also attest to the fact that Richard has deep roots in Imperial Vienna, the city in which the Ancestral Secretariat is located. Richard, the floor is yours.
Thank you, Spyros. It's a pleasure to be here. Just a couple of comments just on what I've heard. First of all, I was really impressed hearing everything that FCI is doing, Monica. It's quite amazing. And I mean, I'm going to talk a little bit about what SFNet has been doing with respect to secure transactions reform, but quite impressive to hear what you're doing. And by the way, just one point about the model law and factoring, which I think is a great product. I think that the treatment of bans on assignment is particularly critical, because that will do so much in terms of reducing the costs and diligence of factoring transactions. It'll just be incredible. And the fact that it's a complete ban, that the ban is unenforceable for all purposes is really critical. And I just want to shout out to Bob Trojan. I never miss an opportunity to congratulate him on the work he did in getting the United States to adopt the Receivables Convention, which is quite extraordinary. So as Spyridon mentioned, I'm here on behalf of the Secured Finance Network, or SFNet for short. We are, for those of you who don't know us, we are the principal trade association in the United States for asset-based lenders. Our members include large money center banks and also small entrepreneurial factoring and finance companies, all of which are engaged primarily in financing receivables and inventory for middle market companies. I believe that trade associations such as SFNet can play an increasingly important role in both the design and the implementation of new secure transactions laws. As some of you know, over the past 25 years, we've been very active on both of those fronts, both the design and implementation. It's been a labor of love for SFNet. I mean, there's this magnificent interaction between the world of corporate finance, in which our members operate, and the world of secured transactions reform, because the very same laws that can be adopted by an emerging economy to enable very small businesses to obtain financing which previously wasn't available. Those same laws make it possible for a large money center bank to do a large multinational credit facility where one of the subsidiaries is in that same emerging economy. I remember when we were working on the model law, we had a visit in Vienna by Professor Eric Dierks, who was in charge of the new secure transactions law that's since been adopted in Belgium, and he held up a copy of the legislative guide on secure transactions. He was able to hold it up with one hand, which I thought was impressive, because normally it takes two. It's quite a large volume. But he quoted from the legislative guide, and he said that the legislative guide inspired Belgium in adopting a new law, and their motivation in adopting the law was they asked themselves right after the Great Recession, what can we do in Belgium to bring ourselves out of the recession? And they decided that making financing available for small and medium-sized enterprises in Belgium would be the way to do it. And it was very gratifying to know that they were inspired by the legislative guide. But once the law became effective in Belgium, which took a few years, there was a lot of, it was not an easy process, but once it became effective, then sort of the floodgates started opening, and our members, mostly the larger money center banks, were able to make loans in Belgium as part of a multinational credit facility secured by inventory, which previously was a very tortuous effort in Belgium. And so it just shows this relationship between the world of secure transactions reform and the world of corporate finance. So we have this wonderful ability at associations such as SFNet to work on secure transactions reform, which helps small businesses get financing and creates jobs and improves standards of living and promotes stability. And at the same time, we're helping our members, the lenders, meet the increasingly globalized financing needs of their borrowers. So it's just a wonderful duality. We have on the design side have worked principally through UNCITRAL and more recently through UNIDROIT, but we were very active in the development of the Receivables Convention and the legislative guide and the model law and the related texts the text related to the model law. On the implementation side, SFNet has consulted with the World Bank over the years on projects in China, Colombia, Costa Rica, Ghana, India, Liberia, Malawi, Nigeria, Sierra Leone, Thailand, Vietnam, and Zambia. And in China, we sent a delegation to teach asset-based lending to 170 Chinese commercial bankers. And in Mexico, we actually spearheaded a project which we were able to convince the U.S. State Department, and ultimately we worked with NatLaw to sponsor a roundtable discussion in Mexico with federal and state Mexican judges and also members of the Ministry of Justice in Mexico, asking them to promote reforms in the Mexican judicial system. And I think it was actually a very successful effort. And what we did was to bring a delegation of lenders, of our members, lenders from JP Morgan, Citibank, Wells Fargo, GE, Bank of America, and others, who basically said, we will provide more financing in Mexico if you can change the perception of the Mexican courts, and if you can institute reforms in Mexico. We weren't the only voice on that front, but there has been a lot of progress in that area. And I mention that in part because I think that's an interesting way that trade associations can work with international organizations, and that is by assembling delegations of our members to go into a country and explain how we would be willing to support financing in that country if certain law was adopted or certain reforms were made. So it's an interesting tool that international organizations may wish to consider in the future. I also wanted to give you a sense of what the SFNet does to enhance the awareness of cross-border lending in general among our members, which reflects the increasing importance of cross-border lending to our members. And it also provides an array of resources that members of international organizations may wish to draw on. One of the messages I have today is that it seems to me that other trade associations have resources that they can make available to members of UNIDROIT and UNCITRAL and other organizations. I'll talk about a few. We hold two major cross-border lending conferences each year, one in London and the other in New York, which examine the major challenges facing cross-border lenders. And we investigate the cross-border, the secured transactions laws of different countries. And various of the people in the audience today have generously participated in our panels over the years. We've recently created an International Finance and Development Committee, which I have the privilege of chairing. And so far, we've created a database of all public cross-border asset-based lending deals that have been done since 2011. And we've made it fully searchable by asset-based lending issue. Where are the countries in which the borrowers are located? And where are the guarantors located? Are there limitations on upstream guarantees? Are there preferential claims in favor of taxing authorities or for wages that lenders need to consider reserving for? We've also begun to reach out to finance associations in other countries and to develop relationships with them and to try to share information about issues of common interest. And we're also developing cross-border educational offerings. And so I mention this because these are resources that you may wish to avail yourself of. And I think that consistent with the discussion about a database portal earlier today, I think the whole concept of sharing information is increasingly important. It's a valuable tool by which we can all advance our work. And finally, just as an aside, I'll mention that we just conducted our first cross-border essay contest, in which we asked members of SF-Net to submit essays on cross-border lending topics, and we had quite a few entries, and we've chosen 4 winners who we're featuring at our annual convention next month. And this just shows the growing importance of cross-border lending to the members of the U.S. lending community. So what can we do better? That's one of the topics of today's panel, and I think associations can do a better job of coordinating with each other to identify issues of common interest and to offer constructive solutions and to streamline the process of communicating with international organizations. We can consider new initiatives like the one I mentioned earlier that we conducted and participated in Mexico, where we can provide, we and other associations can provide lenders to come into countries and help promote innovations in the adoption of laws or the improvement of the court system. And we can share resources in a better way. So it's great to be here and to see all of you, and I'm available for questions later.
Thank you very much, Richard, for your fine presentation and your insights. And thank you for staying up late or waking up too early this morning. We move quickly so that we leave a few minutes for questions at the end. To our last panelist, last but not least, Chris Wohlert, representing the Asia Pacific Financial Forum. Chris is a banker by trade, specializing in asset-based lending and factoring for Wells Fargo Bank, based in Hong Kong. For the past 7 years, he has been involved in efforts within the finance minister's process within APEC, the Asia Pacific Cooperation, Economic Cooperation, and the Asia Pacific Financial Forum to promote access to credit for MSMEs, co-leading the work stream on secure transactions reform, where he has worked on reform efforts collaboratively across various economies, notably Brunei, China, Philippines, Thailand, and Vietnam. Chris, you have the floor, and also thank you for making yourself available at this hour from Hong Kong. Chris.
Great. Thank you, Spyros. Thank you, Spyros. It's a pleasure and an honor to be here, particularly given the magnitude of my fellow panelists as well. As Bob mentioned, World of Open Account, a relatively newcomer to the block without the legacy experience of SF-Net or FCI in many respects. The APFF and specifically the Financial Infrastructure Development Network, where I co-chair the Secure Transactions Reform process, is a newcomer on the block. We were established in 2015 under the Cebu Action Plan within APEC as part of the finance minister's process. I'll point back to a comment that Jay made at the end, towards the end of the last session, where he referenced a little bit of the unique nature of APEC within the context of, particularly when looking around the room at some of the other organizations. Unlike the other organizations like FCI or SF-Net or UNCITRAL or UNIDWA, our organization is not a formally chartered organization. We're probably best thought of as an advisory group, or a providing a network for the finance ministers within the APEC economies. It was in the 21 member economies of APEC. So we provide, we're an advisory panel that supports them on areas of interest. And so APFF provides advice across a broad range of financial matters, one of which that is near a clear priority amongst the finance ministries is access to finance for MSMEs. And so within that context, secured transactions reform, credit information systems, insolvency, and trade finance, if you will, is kind of a subset of some of those, are the key work streams. So this provides us with a relatively unique, I think, unique perspective. Our job is to connect the finance ministries. So that's often it takes the form of either the Ministry of Finance or the central banks, or in some cases both, depending on where different responsibilities align, and connect them with relevant information around how to reform and improve their economies to drive that access to finance for MSMEs. So there's a bit of an advocacy role up into these ministries or central banks, but conversely, there's also an execution component where once they have identified, once the economy has identified this as a priority, that they then look to us to help coordinate or accelerate or drive further. So as we've spoken with economies, we primarily focus on educating them in terms of the entire ecosystem of secure transaction reform. So it's not just the law reform and creating the which is really the foundation for secured transactions uptake by the banks or non-bank financial institutions, but it's also the collateral registry and registry reform and implementation of the registries. So we have held, for example, a couple of years ago, we held a roundtable amongst registrars of the APEC member economies. And so we had registries from Mexico, China, Philippines, Brunei, et cetera, sharing best practices and an open collaboration, a bit of networking for them as well. It's also beyond registry reform, we also then focus more broadly on what we'll call the ecosystem development, valuation. So other ancillary industries that support secured transactions, valuation, collateral management, companies being two of the primary focus points. And we have subgroups. We have subgroup on valuation, for example, that we can access. And then finally, the last piece in our traditional approach has been on capacity building and developing awareness of products, developing expertise. And then over the last couple of years, we have expanded kind of those focuses. Law reform becomes, as many of the economies, although not all, but many of the economies in APEC have reformed their laws. It's really around looking more at digitalization, e-platforms, e-signature, e-invoices, e-warehouse receipts, and then globalization, right? How do we connect? How do we leverage and connect these systems to support? It's a particular interest in the trade ministries. How do we then connect these things so that their SMEs can access the global economy? They can participate more fully in the global value chain. So that's just a very early stage area. It's been delayed a little bit due to the lack of travel and lack of in-person engagement with the pandemic, but we hope to pick that up on a more robust basis as we go forward. So in terms of how the FIDN can support and interact, I think that we actually sit here at the intersection of a lot of these discussions, and can sit here at the intersection. We can help, where there are mandates and donors engaged in law reform, for example, or law improvement projects in the various APEC economies. We can help provide access to other stakeholders that may be able to accelerate adoption, may be able to provide a secondary source of support for adoption through the various processes. as it relates to, and then as we move into capacity building, of course, we've partnered with FCI extensively in our events. We held conferences and workshops and symposiums across these economies to generate market awareness. And I think, Richard, that there's probably more we can do from an SFNet perspective. We've touched on it over the years, but there's, it's really about connectivity. And so that's what makes this conference around coordination on secured transaction reforms great from our perspective, is that it allows us this opportunity for greater dialogue. And I think if I look at, we think about areas for where we can do better, it's really on that last piece. So what we would really focus on, and what we probably what we will be spending more of our energy on, is the connectivity of industry associations and the banks globally into these economies to help grow and develop the markets where we've had law reform, which is many of them. And that's a much longer term process. It's a much more difficult process. It starts step by step, I think, product by product. But that's the area for improvement. So it's really great to see I think it's really great for this conference to see the engagement from the trade groups, from the private industry sector, and hopefully we can broaden and expand that even further, because it's that engagement that I think will help build upon all of the fantastic work that's been done by UNCITRAL and UNIDROIT and the Hague Conference in creating the foundation for the laws. Now we actually have, now there's actually the difficult work of getting them to getting people to use the laws. So in that regard, we also, and particularly for APEC, I also look forward to the formal publishing of the UNCITRAL text on access to finance for MSMEs. I think that will be a great educational text to then just, get access into the finance ministries as well and keep that progress and forward momentum going. So I think with that, I'm not sure that our panel really hit the hooping and hollering that Bob alluded was coming. But hopefully at least that's been a little bit helpful and informative for the APEC component. And Spyros, I will turn it back over to you for questions. Thank you.
Thank you very much, Chris. I don't know if there is any question in the chat. If there is none, I have a question myself to Bob. Bob, the UN Convention in the past 20-25 years was used by states as a model law. So it was enacted in national law, but has been ratified by very few states. What can we do to get the convention enter into force?
Thanks, Spyros. Great question. And so I think the answer is, we, as we were, we had completed ratification by the United States. We had put together a plan, an action plan, working with UNCITRAL, working with the U.S. State Department, working with a lot of other players about how we might get some activity going. And then the pandemic hit, and I think we lost a lot of that momentum. I think it's time to dust that off now and look at kind of the most likely suspects who could ratify the convention. I think that broadly falls into those who have actually done some adoption of the model law concepts, as well as those who have new either presidents or new legislators that are innovative, that want to take their economies to the next level. Chile comes to mind, for example. And we can also look at a regional basis where organizations like the African Continental Free Trade Agreement, or the Gulf State Alliance, that we can look at how regions can adopt the Receivables Convention and really take their regions forward. But I look forward to working with particularly our friends at UNCITRAL to map out our plan going forward.
Thank you very much, Bob. And NatLaw would also be interested in cooperating with your organization in this regard. Richard? Yes. I have a question. You have a question? Sure. Yeah. So go ahead, Will.
Thanks, Spiros. I thought I'd selfishly ask a question from the UNIWA perspective that would particularly help in relation to our project on the model law and factoring. So obviously, from sort of the legislative perspective, we work with the private sector organizations, the development of the instrument, and once it's developed, in the promotion and implementation of the instrument, and then finally in the troubleshooting once it's into force, making sure it's actually facilitating transactions like it was supposed to. And I think, as discussed over the last 2 days, we've done a good job in working with the private sector in the development and the legislative drafting process. But then from the UNIWA perspective, we have very few resources once we move to implementation, promotion, and monitoring. And we're very much reliant, as discussed, on the IFIs, on the people in this room and online in assisting us with our implementation and promotion. And of course, with our private sector organizations, who are the most important stakeholders because they use it and the biggest beneficiaries. So my question to the panel is, this time, by the middle of next year, we will have a model law on factoring, everything going well at the Governing Council. At that point, we move from legislation to implementation and promotion. With the limited resources that we have, how can we assist the three the three excellent stakeholders we have online, who have all participated very closely over the last 2.5 years in developing this instrument? How can we help you promote it, implement it, and make sure that people actually start using it? What can the legislative side do? That's my very selfish question. Sorry.
Who wants to address Will's question?
Let me take a shot at it.
Go ahead.
I think it's a great question, and I think it ties into what I was suggesting earlier. I think that trade associations can provide members, financiers, to, make trips to a particular jurisdiction, or to participate in virtual conferences, to explain how important the law is to them, and how their willingness to provide financing in a particular country will be impacted positively by the adoption of the model law. And I think there's a lot of work that can be done in that area. I mean, FCI has been doing, a tremendous amount, but I think that there's a tremendous amount of additional work that can be done there.
Yeah, definitely. I think that we work with government, central banks, and to create awareness, but the awareness also comes from the bottom up, and that is the part that we are missing. And I think that working with companies and with the stakeholders in those countries to press the governments to move in that direction is also key, I think. And I would like to have Chris also input, because I think he has a lot of intimate relationship with the Ministry of Finance. So I think his input was more than valuable.
Yeah, I agree. I think those make sense as well. I think key to that engagement will be a little bit of homework, up front on our sides, in terms of identifying which are the economies, countries, jurisdictions that are in most need of, kind of a cross-reference of those that are in most need of the model law and factoring, as kind of contrast that with those that are open to reform ideas as well. And where we have that crossover, those are of course easy wins. Where you have a need but lack of desire, that's a bit longer term, and that's where a bit more of the education, advocacy would need to continue to take part over time, or maybe an alternate strategy in terms of trade ministries and various avenues to kind of percolate that, as Monica, as you said, right, percolate that up from the ground up as well within the economies themselves. But yeah, I think there's to answer Will's question, there's a fair amount that as we move forward towards adoption, there's a fair amount that we can collectively do to help advocate and push these instruments forward.
Yeah, I think that events like the one that Richard was talking in Mexico could be very, very important, where you take all the stakeholders, you take and actually take people from different sides, different backgrounds, and you see the importance of and how the perception of these financing tools are. And I think that's a wonderful idea, Richard. So I didn't
Thank
know,
you
but
very
I
much.
congratulate you.
Thank you very much. Bob, you have the last word.
Thanks, Spiros. I would just ask that we look at this as we might in the private sector. What we have here is a product launch. That's what we got. So we're finishing the product, and now we got to launch it. So if we were a private company, how would we do that? And I think we can look within our world, particularly on the UNSTRAL side. What did we do, for example, with the Singapore Convention? That had a splash. It had communication. It had a website. It had a lot of activity. It was sexy. It had graphics. It was awesome. And we need to do that as well. We need to excite the market that we have a new product, and figure out how to do that.
Very much. Unless there is any other question, we have to leave it at that. I'd like to thank all the panelists and thank you for your attendance, both here and remotely. We hope that we have shed some light on the participation of NGOs in the design and implementation of law reform initiatives, and gave you some ideas about how this process can be improved in the future. Thank you very much, and we look forward to the next part in our program, or perhaps in the coffee break. Thank you.